And right now, let's welcome our first guest, Jon Najarian, a well-known investor, money manager, and media analyst on CNBC's Halftime Report, as well as Fast Money. He's also the co-founder of Investitute and has 25 years experience working as a floor trader. Jon, welcome back to the Income Generation.
Great to be with you, David. Thank you very much.
So you probably don't remember this because you're on TV a lot, but when you were here last time, it was December, and we were all up in arms because the Fed was threatening to raise interest rates 4 more times. And you said, everybody relax, that's not going to happen. The Fed is not going to be as aggressive as everyone thinks. But be honest with me now, be honest.
Okay.
Did you even think that the Fed was actually going to lower interest rates in 2019?
At that time, David, I didn't think it was likely that we'd see rate cuts, but I thought that they had already gone one step too far. I was surprised that they might go another increase, which they did, of course, in December. And I think that's what they had to pull back from almost immediately. But unfortunately, they strung it all the way out to July 31st. And that's one of the reasons the market has been, going like this, back and forth like a roller coaster.
Sure. In fact, if you think about it, the market really since January of 2018, we're going on 20 months now, where it's kind of been in a sideways channel, if you will. Volatility calming down, then increasing, then calming down again. So what does that mean moving forward? I mean, it's interesting. Usually when the Fed lowers rates, the market they love it. But this time the market looked beyond into the reason why they're lowering rates, and the market initially at least took that rate drop as a negative. You think they're going to continue to do that?
When I look at why they moved on rates, I think, David, because the rest of the world is slowing so dramatically. And the Fed chairman, Mr. Powell, actually addressed that and said, we know that we have a dual mandate. We've got full employment as well as inflation, and we're trying to make the inflation hang around the 2% level and get as many people working as possible. But the problem is that, of course, America sells a lot of stuff overseas. That's not a problem, but it's a problem if those economies are slowing, and they clearly were. And that's why I think he thought we needed to push people more towards investment by taking fixed income down.
So, obviously with that rationale, everybody thinks we're going to see another interest rate cut this month because, the markets are expecting it. But do you think we'll see another one before the end of the year after that?
I do. I wish, David, that in July they would have done 50 basis points, in other words, 0.5%, because I think then you can get out ahead of the bond vigilantes and everybody else out there. Rick Reeder over at BlackRock said virtually the same thing. He said, look, the market is the 10-year bond, and the trading is basically the 2-year. And the only way you're going to get the 2-year to drop, because the problem is when we invert, the 2-year is higher than the 10-year. And that tells people, man, there's no real reason to be in the markets. People must be afraid of the markets. You need to knock that 2-year down. And you only do that, I think, by making a rather dramatic cut rather than a small cut. So I wish they would have done 50. The fact that they didn't means I think they're going to do 3 instead of one big 50 basis point cut.
Great. It's funny. I always accuse a lot of the people that are on television, people like yourself, of being what I call stock market cheerleaders, always saying the market's going to go up no matter what. What I love about you is you have a very common sense approach to it. So we come back from the commercial break, and I'm going to talk to you about what do you think the chances are that the Fed could make all the right moves, even with what's going on abroad, to keep the markets going strong. So stay with us, please. And you stay with us also. We'll be right back here in a minute on the Income Generation. Now it's time to bring back Jon Najarian, well-known investor, money manager, media analyst on CNBC's Halftime Report and Fast Money, co-founder of Investitute, and most importantly, friend of the Income Generation. So Jon, thanks for sticking around.
Thanks, Dave.
And tell our income generation members, who do you think is going to win this tug of war? We got the central air conditioning from abroad, essentially trying to cool down the stock market because the economies there aren't doing so great. In our country, although business investment has come down a bit, consumer spending is still pretty hot, and the Fed seemed to react more quickly this time with dropping rates. So can the consumer spending and the Fed, i.e. this little space heater, can it defeat the central air conditioning in this big room called the United States?
Well, the good news, Dave, is that you've identified that the consumer, the U.S. consumer, which is 70% of our economy, is still very strong. And I think with interest rates pushing even lower, you're going to see a lot of us, I count myself in there, refinancing and having more money to spend because I'm going to be spending less of that money on whether it's car loans, credit cards, or my mortgage. And I think that's a real positive. So that'll continue to boost the U.S. consumer. And again, I think this is a good thing for our economy, and it's something that they wish they could do overseas.
What does the Fed need to do, in your opinion, to take this business confidence that's starting to wane a bit and to bring it back so that businesses are willing to spend with confidence again?
Well, I think there's only so much the Fed can do, quite frankly. They're pretty good at cutting rates when they need to, and they're also pretty good at raising rates when they have to sort of mitigate the boiling over that you might have if everybody is just pushing inflationary pressures to the upside. That's not the case right now. So I think the Fed is doing about as much as it can. Other than this, I think the biggest thing that'll drive our economy right now is a trade deal with China. That seems more and more likely. The president just extended out by 2 weeks. He basically said, hey, I'm going to give us breathing room, and I'm going to basically offer an olive branch to China. Let's see if they take it. And I think they will.
So you were slightly cautious when we spoke 9 months ago about the markets, although pretty optimistic. You seem to be more cautious now. Is this the type of thing that you're going to be talking about at your Investitute conference, which I believe is coming up next month? Is that correct?
Yeah, we're going to be doing a conference in Vegas, October 4th and 5th. And we've got some just big heavy hitters, Anthony Scaramucci, Kevin O'Leary, Mark Fisher. My brother Pete and I will be speaking there. There's a whole bunch of folks that are going to be giving guidance as to the most likely places where people can go to make money right now, whether that's in stocks, options, futures, or crypto. We're going to have all of that on stage, and should be 400 or 500 people. Should be a great time. I wish you could be there, Dave.
I wish I could. I'm actually at another conference in Naples, Florida at the same time, unfortunately. So 30 seconds for our income generation members that can't be there, who are 55 years or older. What's your best advice for them?
I would say they should be invested right now. Martin Zweig says that. David Kotai of Cumberland Advisors says that. I'm saying that if you're taking rates down, that's going to be good for stocks. So I would be buying stocks here and holding stocks that I already like.
Okay. So now 20 seconds, the most important question of all. Who are your two favorite candidates right now for the Super Bowl?
The Vikings. And gosh, this is a tough one, but I still think New England. Tom Brady still seems to have it, my friend.
I know, even without Gronkowski and other players, it's amazing what they can do over there.
Yes,
so year after year. So again, thanks so much for being a part of the show. We really, really appreciate it, Jon.
I appreciate it too. Thank you, Dave.
Stay with us. We'll be back here in a moment on the Income Generation.